Before we start this episode, I'm just reminding you that it helps whenever people like you share this episode or the podcast with your friends and family. If you can do that, that would be awesome. It helps us and it helps them. Additionally, you can get your first month plus 7 days free of Kids Learning Lab Plus by going to kidslearninglab.com/free-month. That's kidslearninglab.com/free-month. Thanks for continuing to support Kids Learning Lab. In this episode, we'll be talking about 4 complex topics: the stock market, cryptocurrencies, crypto mining, and NFTs. Welcome to Kids Learning Lab, a learning podcast made just for kids. So, what is the stock market? Well, most large companies like Apple or Microsoft aren't 100% owned by themselves. Instead, people can buy part of the company. When they buy part of the company, they own a small percentage of it. This percentage is usually incredibly small, at something like 0.0000001% of the company, but that percentage stays the same. When the company grows, your piece of the company also grows. Later, you can sell this piece or stock of the company you have and get money from it. For example, say I buy one piece of Google. The current price of Google stock is $191. You can buy as many pieces as you want, and let's say I buy 2. That means I pay $382 right now, 191 times 2. Then, let's say Google announced a new product and they made money from it. Let's say the price of the stock went up to $200, 191 to 200. Now, instead of just owning $382, I own $400. I can choose to sell my piece of Google now, or I can hold on to it. Suppose I hold on to my 2 pieces. However, Google ends up losing some money from a bad product they made. Now, instead of $400, I only own $360. It went down. If I sell now, I would lose money because at the beginning I paid $382, but the price right now is $360. So I would lose $22. I don't want to lose $22, so I hold on. Imagine the stock rose again to $210. Now I own $420 of Google, so this would be a good time to sell. Suppose I sell, then I make $38. You could technically say this was free money, but you had to watch the price and sell at the right time. This is how adults, maybe even your parents, make money. When you buy a stock of Google, you buy it from the person selling it. If Google does well, your investment succeeds. If it doesn't, you lose your investment. Different companies on the stock market have different symbols, which is a ticker. Apple's ticker is AAPL, and Google's is GOOG. You can think of stocks like taking a slice from a pizza. The whole pizza is the company, or Google, and the slices still in the box are what Google still owns of itself. When you buy a stock, sometimes you take a slice from another person. When you sell a stock, you trade your slice with someone else who pays you money for your slice. Sometimes the pizza can grow, and when that happens, any stocks you're holding also grows. But another thing to keep in mind is that you shouldn't take all your pizza slices in just cheese, or one company. Make sure you take different slices from different pizzas, like mushrooms or pepperoni. That's because you never know which pizza is going to grow, so it's best to take different slices from different pizzas. In real stocks, this is called diversifying your portfolio. Sometimes companies do stock splits. Say Apple's price is at $200. Say you own one of those, so you own $200. Then Apple decides to stock split, changing its price to $100. Now you own 2 stocks of Apple. It was cut in half. Your 2 stocks still are valued at $100, making $200 total. You still own the same amount of stock though. It's just split. Companies can do this so that people can buy their stocks in smaller, cheaper amounts. Imagine your pizza slice being cut in half. You still have the same amount, but it's now broken into two pieces so traders can buy small pieces from you without having much risk. Let's move on to the second part of this episode, cryptocurrencies. But before we continue, here's a short message. If you're a kid, which you probably are, have you ever heard about coding? Coding is used to program computers to make them do whatever you want. My book, Python Learning Lab, introduces kids or any beginner to the world of Python, a really easy and simple coding language. Buying the book also helps support Kids Learning Lab. Thanks for supporting us, and let's get back to the episode. You can buy the book by going to kidslearninglab.com/python. So, cryptocurrencies. Do you have any idea what that is? Well, you probably know what a regular currency is. The US dollar is one example of that. The Great Britain pound is another. The dollar and the pound's value rises and lowers. Back in 1950, you could buy a movie ticket and an extra large popcorn with just $1. Nowadays, you can't even get a candy bar with $1. This is because of something called inflation, which makes money lose value over time. Sometimes, in a situation called a recession, the dollar can gain value. Before we talk about how cryptocurrencies work, let's talk about what a cryptocurrency even is. Well, a cryptocurrency is like a dollar but online, on the internet. You can convert your dollars into a cryptocurrency, like Bitcoin or Ethereum. Some stores or websites even accept Bitcoin as a currency to buy things. Crypto is stored in things called digital wallets. These are protected by passwords. Cryptocurrency is useful for sending money to anywhere in the world because there's no bank fees or international fees. Crypto prices can go up and down a lot, usually pretty fast. Crypto also experiences highs and lows just like the US dollar. But over time, the prices of crypto have generally increased. Just like you can convert your money from US dollars to pounds, you can also convert your US dollars into Bitcoin. Bitcoin and other cryptocurrencies are similar to stocks because they can go up and down, and you can invest in them. Now, it's time for the third part of this episode, crypto mining and NFTs. What is crypto mining? Crypto mining is a way to keep the cryptocurrency system safe. What happens is that little devices called crypto miners compete in competitions to see who's the first to solve a puzzle. This puzzle gives that little miner access to the blockchain. The blockchain is like a notebook. Every miner looks at the notebook, and if they see a previous miner wrote something false, they can report it. When the miner that first solves the puzzle opens up the notebook, they can write any transaction. This is like converting US dollars to Bitcoin or something like that. The puzzle is used to it because it becomes hard to access the blockchain unless you run through all the puzzles. Other miners are watching the blockchain too, so they verify what the miner is writing in the notebook. The main reason miners work to do all this is that whenever they win and solve the puzzle first, they get a small reward of coins. Some people have miners at home in their attics or whatever, and you can make a little bit of money from it. Now, let's talk about NFTs. NFT stands for non-fungible token. Non-fungible means unique. NFTs are like crypto because they use the same blockchain technology. But when you buy an NFT, you can get a small reward. It's like taking the pizza slice, but you can actually eat it. NFTs can be art, games, or pictures. Each reward is unique. People can sell these rewards. It's stored on a blockchain, just like Bitcoin. And because nobody can fake it, the notebook keeps track of who owns it. People have bought NFTs of art, music, videos, and even virtual land in games. They're like digital collectibles. In this episode, we covered the stock market, cryptocurrency, crypto mining, and NFTs. Thanks for listening to this episode. This episode was edited and produced by Ishan Buddhisagar. This episode was written, recorded, and hosted by Ishan Buddhisagar. Learn more about Kids Learning Lab by going to kidslearninglab.com. Buy a paid subscription and receive bonus episodes and a newsletter by going to patreon.com/kidslearninglab. Thanks for listening to Kids Learning Lab.